Hi everyone, it's Kathleen here, Research Director at XTB. The main thing that's on everyone's minds today is tariffs, particularly tariffs on the European Union. The US hasn't said exactly what tariffs it will apply to the EU, but the market is expecting something big, potentially what Trump did with China, where all EU imports are tariffed. The EU has responded with a counter-threat of retaliatory tariffs, and they have matched President Trump's rhetoric, essentially saying they won't take this lying down. This certainly escalates the potential for a trade war, and it could lead to a more risk-off tone to financial markets after stocks moved higher in recent sessions. Now, the purest play on tariffs right now is gold. The gold price has reached fresh record highs this week, although it's slightly lower on Tuesday. The gold price still looks comfortable above $2,900 an ounce. We have mentioned how gold is higher by more than 10% so far this year, which means that the yellow metal is outperforming most stock markets. Gold is rallying because 1, it's acting as a safe haven, and 2, investors are buying it in anticipation of the US slapping tariffs on precious metals. Now, all eyes are on whether gold can reach the key $3,000 per ounce level. This is a psychological level, and it will be interesting to see what the gold price does as we approach it. Gold traded in a long-term range between $1,600 and $2,000 between 2022 and late 2023, and it tends to stay range-bound around these big levels. It will be interesting to see if it does the same this time. Now, it's worth noting that volatility has fallen, and on Monday, the VIX index was below its average level for the last 12 months. This suggests that investors are looking through tariff risks and instead focusing on earnings data, etc. However, are they being too complacent? If tariffs impact the global economy, then it could hurt corporate profits down the line. Thus, as the EU comes under President Trump's glare, the rally in European stocks is under threat. A lot of the tariff threat is already priced into the FX market. The euro is lower on Tuesday and could head back to parity versus the US dollar, but we think it might struggle to extend losses beyond this level, depending on how the EU's retaliatory tariffs impact the US economy. Overall, today feels like a big day for tariffs that could have a big impact on the direction of the global economy for the rest of this year. Now, added to this, we get a US CPI report this Wednesday that will be crucial to determine whether the Fed can cut rates in the first half of this year. Inflation pressure is expected to fall a notch, but a higher or lower than expected report could trigger big moves in the dollar and in stocks, as equities have exchanged tariff fears for monetary policy as the next main driver of sentiment. That's all for now. Thank you for joining, and good luck trading this week.